there has been a shot in the arm for an Educomp, which has finally managed to securitize some of its receivables with the banks. What does this mean for the company? Let's go across to Sunita Nagpal for a perspective.
Absolutely, this is one positive news that's come for the stock, but it's not a very big boost. It's a very only a sentimental push. If you see what this means is basically that the working capital pressure that the company was facing for last couple of quarters will ease out now. Remember, for last 2 quarters they were not able to securitize their receivable, which is a very normal norm for their business. Basically, they securitize their future income with the bank to get money in advance so that they can invest in their business, which was not happening for last 2 quarters. As a result, their debtor days, which were at 164 at the end of Q4, had gone up to as high as 240. But now with 410 being securitized, they were debtor days will come down to nearly roughly about 150 days. So, but having said that, I must also point out that most of the analysts were working with the assumption that the FY12 debtor days will be anywhere between 157 to 160 days. So this is already which has been discounted by the analysts, and there are other concerns which are much bigger than this working capital pressure that the company was facing. The concerns are basically on the balance sheet being highly leveraged. There are also FCCB redemption coming in just 8 months, and there is a huge interest payment due on that front. Also, there is expectation that the competition will increase and the pricing could come under pressure for the company. So these are the concerns that most of the analysts are more worried about, and they're also not very sure whether the company will be able to meet the guidance they had held out in the Q2. Also, they were very surprised when the company said they will be meeting the guidance of 40 to 45,000 smart class additions, as well as the PAT coming at 370 crore rupees for FY12, which most analysts feel is very, very unlikely that the company will be able to do. So that's why if you look at the analyst recommendation, they are mostly maintaining either a hold or a sell for the company. So this is a shot in arm for this news is a shot in arm for Educomp, but other problems are much bigger and will continue to plague the stock in short term.